Hello and good morning. This is Modified Darvas Box MDB, and I decided to do a quick video on updating the S&P 500 earnings estimates, because looking at earnings estimates is a good way of seeing what's going on with the fundamentals of the stock market, and get a sense of valuations and things like that. The inputs which help, I don't know how you call it, which help create the trends which we're trading, maybe technically in the market. So there's always a fundamental piece, and in my opinion, it is important to know, what's going on. Is it a primary indicator? Am I trading off of it? No, but it's a secondary one, but I think it's important. So we've got the S&P 500 spreadsheet. I'm going to show you guys how I update this. It's just ridiculously easy and won't take much time at all. So we've got the date here. Yep, May 7th from the last time. So yes, it definitely does indeed need to be updated. We've got our handy PE levels section right here, where we can see what I think is the definitions of the market at certain PE levels, like greater than 25, what's strong, what's average, what's weak, etc. Then we've got the estimate numbers here, which are the raw numbers there, the percentage growth rates here, the trailing PEs here, the forward PEs here, and the what I call rolling EPS, just where the front end jumps on and the rear one jumps off like this, and then it constantly changes. So this here's estimates, this here's actual numbers from history, and then this here's a little commentary, especially FJB, which I think we can all agree upon in this administration. So you've got the historical numbers down in there, and then I've got an annual table over on this side, but I don't really mess with the annual much. So the way we update this is simple. We go to the S&P 500 website right there, and we come to the website and we scroll down here and we go to index earnings, and we open the file, and there we enable the editing for the file, and we're going to prep this. Well, what I do is I take the estimates here, I drop them here, and then this will give a comparison of the last time I did an update versus the new numbers that have come in. So we've got the file here. Yep, May 14th. Indeed, it does need to be updated. This gentleman right here is the man who runs this. He is on Twitter. I don't think he posts a lot, but this is the person in charge of all these numbers. And it's there's a lot of good info in here, how they slice up the index, like the contribution of different sectors, etc., for the earnings. And the earnings drive the market. And here we go, we come down to this section, we copy this right here, paste it right into here, and let's update the Treasury bond yields here. I got a special page going straight to it. 442. That looks good. And we'll hit the back up. I go to Yahoo because Google Finance used to have that, and then all of a sudden they cut it off. Unbelievable. And now we've got here the percent completed. Yeah, I updated this once before. I'm re-recording this video because the volume button was turned off, so redoing it again. But normally I'd take this here, copy it right here, and now we want to take the numbers here. We want as reported, because those are the numbers that are being reported in the earnings releases, like how much per share XYZ stock earned, XYZ per share. So we do this, and this is all driven by formulas. And there's the change. Oh, estimates fell down minus 0.45%. And you can see the progression what fell the most? Well, the near-term estimates fell the most. And then last, we got to update the current closing price of the S&P 500, 5303.27. Okay, so now that we got the numbers updated, we'll save it. And let's see what it's telling us. So on this quarter, which is almost fully reported, we are showing 1% growth of this quarter versus the same quarter last year. March to March, right there. Wow, 1%. Don't blow me away like that. That's amazing, right? No, it's not amazing. 1% kind of sucks. But when we look at this, we say 1% at a 27 PE, that's a bubble. And that means investors are paying a lot of money. Well, they're paying a very high price to get these earnings. But people base their decisions on what's coming in the future. And the good news is that the future is more positive, knock on wood. Right here, we've got the average. So we're going to average about 16% earnings percentage growth in the future going out to 2025. That's data that an investor can sink their teeth into. Now, the current quarter is pretty much locked in. I mean, 87%, it's not going to change all that much. And the market's a forward-looking machine. So as a forward-looking machine, we're looking here around the September quarter, my handy little orange bar. And that's showing us an EPS of 19% growth. That's definitely a good deal better than 1%. So how much are investors paying for that? Well, on the trailing PE, that's about a 25, which, as we see again, the valuation, that's bubble territory. That means investors are definitely paying a premium to buy the index here. Now, forward PEs are a little more reasonable, 24 and 22, which more indicates a strong market. And that seems to make sense. I think one could agree that the market we're seeing now tends to match up well with this stuff. And it does. On these dips here, where we've had, herky-jerky growth, it does show up in the charts. See right here? We get some warning signals right here. We get a little pullback right there. Well, what's happening with the numbers? Whoops. Here we go. Well, look at these numbers going back here. It's up and down, up and down. And actually, right here, we even had negative growth. And that was part of 2022, which really was this stretch right here. Sorry, wrong area. This stretch right in here. Not much happened in 2022. 2022 was a tough year let's back this up. 2022 was definitely a tougher year. Was anybody making a fortune then? Not so much. But then, earnings started growing again, and now we've got a nice forecasted future at this point. But what concerns me a little bit is this premium price being paid. Now, understand, these future numbers here are based on the assumption that the index at 5303.27 would stay flat all the way through to September. That's what it would be in September if the index didn't change at all. It just went straight line flat. It'd be 22.25. A little expensive, but not crazy. What's going to drive these numbers up or down is if earnings keep getting bigger. And the amount of earnings are just incredible. American companies are phenomenal how much money they make. $58, $61 a share, amazing. When we go into our actual history tables, we can see the index earned $20 a share in 2006, $17 a share in 2010. So for it to be earning $60 a share now, that's just incredible. And it tells you some of the fundamentals here. Again, the big thing though is the PEs, and this concerns me a little bit, is that the PEs generally were kept below 25 for many years because nobody wants to go into bubble territory if they can help it. Now it did go into higher than that during periods of economic turmoil like COVID and all that. But generally, in this column, let's see if we can find a here, like going up into COVID, all through here, PEs were in the teens and below in the 20s. I mean, it's just incredible. So for the market to start allowing prices to really, excuse me, not prices, valuations to be really getting higher than that is, well, it's interesting. I take note of it, but what does it mean? Well, it just means investors are paying a premium price to get into this market. So this is our S&P 500 growth forecast look. It only takes a few minutes to update. And currently, it looks all clear on the horizon. But keep in mind that this market is an expensive market. So, yeah, the chances that it could pull back just to get to a better valuation, well, that could occur. But, you know, we will see what happens, one day at a time on this. But this is how we look at the market from a fundamental viewpoint, and all this stuff correlates. The charts, the numbers, they all blend together. Sentiment, you name it, it all comes together. So thank you for watching. Hope you learned something new on this video.